G'day folks, welcome back to another review of natural gas. Now the charts are showing a sharp decline still continuing, no sign of a pullback yet. And before we go any further, hit that like and subscribe button. We're going to include some back testing as well. Also, don't forget to reference the +1 videos with links in the description, which show various strategies we've covered previously, and we'll do some more in the future. But in terms of the outlook, the natural gas market is categorised by a fragile balance. While global demand, particularly from fast-growing Asian markets, continues to rise, the supply side remains tight. Geopolitical tensions, particularly the halt of Russian pipe gas transit via Ukraine, are a key factor in fueling price volatility, even though ample European storage capacity and diversified LNG imports mitigate immediate supply risks. The market is seeing an increase in US LNG production and exports, which is contributing to the overall supply, but this is being met by strong global demand. Extreme weather events and the increasing role of gas as a backup for renewable energy sources are also adding to the market strains and making prices sensitive to changes in weather patterns. So if you're a regular, you know I always look at the long-term trends. This is the natural gas market on the monthly, the weekly and the daily. So on the monthly, the price is still above the moving averages, giving us a bullish momentum there, but notice the CCI1500 down here has broken down into that moving average range, and it's about to break below that, giving us a possible bearish momentum longer term as well. And by that stage, we may see the price break below the moving averages. Also notice here I've identified a fair value gap, and it looks like the price is coming back towards that longer term fair value gap, and that could be reached in the coming days, weeks, most likely. Now on the weekly, it's already broken down below the moving averages of both the price and the CCI. And again, I've got that another fair value gap. This is different to the monthly. This is the weekly one. Again, another fair value gap that hasn't been filled, unfilled orders. I don't trade on these. I just look at it as a potential area of price reversal in this case. But also notice shorter term here, we've got another fair value gap. So we might see the price bounce initially before possibly moving further to the downside. On the daily, likewise bearish momentum on both the price and the CCI below the moving averages. And again, you can see there we broke below and hit that fair value gap. But up here, we've got two fair value gaps that haven't been penetrated yet with candles or for filling those unfilled orders. So we may see the price bounce at some point. Again, I can't tell you when that's going to happen. That's why we follow the moving averages primarily as our trend. Now going to the intraday charts. So if you're trading on the 1 hour in this case, you take the direction of the daily. So you're going short only, you don't take long positions because the momentum's going to the downside. So at the moment, what we're looking for as well is, first of all, the trend. So the price is below the moving averages, but notice here the CCI is broken into that moving average range, giving us a fresh breakout to the upside. So that's a fresh bullish break on the CCI, but the price is still bearish. So just wait for the price to break above that, but more importantly, wait for the daily to break higher to start taking long trades. So don't go long yet. Most of the momentum, as I said, is still on a downtrend. Now, again, notice here in the short term, we've had these fair value gaps. I've got a small one there, and that's been partially filled with that, but probably more likely to, further downside to remain. But also I've got these other two fair value gaps there, which we may likely see a bounce to fill those unfilled orders. We had some fair value gaps back here. These ones back here was about 50% filled with the action of those candles, and these ones are all being fully filled. Now looking at the back test, we go predominantly short. And what I've done here with the back test of the stop loss approach and the average down approach, we've started from around about the 23rd of June when the price broke below the moving average band, and so did the CCI. That's where you would have started going short according to the daily trend. And at this point, you'll notice here the stop loss approach did okay as long as the price kept dropping, but eventually had a bit of a few losses, which brought down the profitability. That was because of that bullish move there on both the price and the CCI. Now I'm deliberately zooming out here. It's always good to zoom out more longer term on these charts sometimes, just to get a feel for the direction of these moving averages. So you can see here during that period, you would have been going short in the direction of the daily as well, but also the hourly, and you would have closed it out once you saw the moving averages broken and started curving up at that point there. The CCI gave you an early warning there. You'll notice there we had let me just zoom in here for a moment. We had a bullish divergence there versus lower lows on the price. And as soon as you started seeing that break higher, then you probably would have closed out your positions once the price also broke above the moving average range. You could have got out earlier, but again, either way, that's why I like to zoom out a bit and wait for the price to break higher and start moving up. During this period, you would have kept short positions and then closed it out there, and that would have been a nice little break for that initial trade to have taken. Now where we are at the moment, again, let me just zoom out for a moment. Where we are at the moment, again, looking at the bigger picture, going short when the CCI is in a downtrend, in accordance with the daily, of course, when the CCI is in a downtrend, and so is the price, and then closing it out once the moving average of the CCI and the price start bending up, but especially the price as well. Avoid going short during that period, of course, and then start going short again once the moving averages start bending down again, and so on. Again, avoid going long during that period, and then you would have noticed here, in accordance with the daily, you would have started taking short positions with a bearish divergence, going short there when the CCI and the price broke below the moving averages, and got into that trade there. Now, again, another bullish divergence there. You would have got out at that point once the price broke above the moving averages. So where we are at the moment, you would have taken, the last trade you would have taken would have been at that point there, gone short, and closed it out when the CCI broke into that moving average range. And I like taking the profits when they break into the moving average of the CCI, because notice you get out at an earlier stage. You could let it run, but let's go back to this one, for example. Taking an entry short and close it out when the CCI breaks higher, and that would have avoided a few points in terms of losses going high against you. Again, here, you could have stayed in the trade. Again, we're not sure where the price is going. It could fall further, or it could actually start rising. So take your profits and wait for the CCI to break to the downside if you were trading that. So this is BOIL, the ETF. You can see there on the monthly, still very strongly bearish, with no CCI drawn on the monthly. But just looking at the chart itself, you can tell it's bearish. And we had a few fair value gaps here which were filled. This one up here hasn't been filled yet, so just keep an eye on that. On the weekly, bearish momentum, again below the moving averages. You can see there the CCI is very narrow, but it's broken to the downside, so it's giving us a bearish outlook. But back here we had a bullish divergence on the CCI versus lower lows in the price, and that was a very long-term bullish divergence. It went for a couple of years before finally breaking higher, and then now it's broken back down again. So now it's the CCI is moving in alignment with the price. Again, notice up here we've got these fair value gaps. Again, don't trade those. We're just looking at a potential area of reversal. If it does happen, it may reach these areas very long term. On the daily, again, the price is below the moving average, and so is the CCI. And I've drawn these diagonal trend lines some time ago, and it looks like it's sort of staying within those trend lines. And this one actually, the upper trend line is being followed very closely with the price action. But again, we look at predominantly the moving averages and any break to the upside. At the moment, taking short trades only. We've got a fair value gap there, hasn't been filled, so we might possibly see a bounce in the near term. Looking at the 1 hour chart for any micro moves. Now what we've got here, by micro moves, I'm talking about especially divergence. So at the moment, the daily's in a downtrend. So don't go blindly enter short. We want to make sure the hourly is also trending downwards. Now back here, we had a bullish divergence. You can see there it bounced, hit our target range, and that target range, again, for those new to the channel, we draw a Fibonacci from that low to that high, and that's at 38% minimum retrace. In this case, it went as high as about the 50% range of that Fibonacci range. So that bullish divergence happened. So if you're going short during this period on the daily, you would have closed out your positions based on that bullish divergence. Again, avoid going short during this period, obviously, and then go short again once the moving averages start bending down. Remember what I told you? Watch the moving averages from a distance like that. That gives you a better insight sometimes to start going short. And again, you possibly could have closed out your positions on that candle there when that CCI broke into that range. Now notice the CCI kept rising here versus the price rose slightly, then it dropped further. So don't cry about it. Just wait for this to play out if you've already exited the trade, and wait for the CCI and the price to move in the same direction. At the moment, you see there before our last video, we drew a bullish divergence to that point. Now what's happened since? That trend line actually extends to that low there versus that trend line to that low. So we're just going to extend the divergence. So we've still got a bullish divergence, and we're going to readjust that target range because that price has dropped further. So we take it back to that high. So that target range now becomes that 38% range there. That's how you do it. So wait for this to break strongly. And when I say strongly above the moving average of the price to complete this divergence, That broke above, but notice the CCI was still, the moving averages were still falling. Very narrow, but they were still falling. What I'd like to see is back here, for example, that broke higher, and once you start seeing the price especially and the CCI moving averages start curving up like it did back here, that's when you know that divergence has actually completed. And back here, that divergence range, if you like, completed, and the price kept rising from there. So back here, for example, what I'd like to see is those moving averages start curving up more than what it did here, but exactly what it did like that back there. And by that stage, you'll probably see the price reach this minimum range, assuming the price starts moving back from where it is at the moment. Of course, the CCI could keep rising and the price could keep dropping, in which case we have to extend this trend line further. So I've got here for KOLD, this is the inverse chart to natural gas. Now again, we've got a bearish momentum at the moment on the monthly, and we've got a slight bullish movement. It's a bit hard to see there, but it's a slight bullish movement on the CCI, so I'd call that a neutral positioning. Again, notice these massive fair value here on the monthly. So again, we might see the price break a lot higher. And this could take months or even years to play out, so I don't go placing long orders based on those. On the weekly, we've got a bullish momentum at the moment on the price and the CCI, both broken to the upside. And notice also the moving averages have curved up, which is what you want to see normally for a nice trend. On the daily, we did have a bullish divergence back here versus lower lows on the price, and that broke up. Again, notice the moving averages breaking higher and curving up like they were here, like I mentioned before, and that's where you would have started seeing the completion of that bullish divergence range. Now in this case, the price kept rising, and you can see they're still in a bullish momentum with both the price and the CCI moving higher. Going to the 1 hour chart for any micro moves, so even though it's going higher, you take long trades only. But notice here we've had in our last video, we showed you a bearish divergence versus higher highs on the price. Similar to BOAL, what we do now is we extend that. That's still a lower high on the CCI versus a higher high on the price. And that's still a bearish divergence. And also we have to adjust our Fibonacci range target. So that was the previous target range, and now we're going to move that to there. So readjust it to 23-38% range. So if it does pull back, it's a minimum range we expect it to pull back to. Of course, it could just touch it and bounce, or it could actually fall right through. So again, we're going long predominantly with a daily trend. The 1 hour is actually into that moving average range. It's just touching it as we speak. So wait for that to break higher. And by that stage, if you want to see further upside, you want to see the price break higher as well, along with the CCI. So for UNG, on the monthly, bearish momentum. Currently, I would call it neutral because the CCI is in that moving average range. I'd wait for that to break below to start going short. And that was a response of this bullish divergence we had here, very long-term bullish divergence versus lower lows on the price. It broke up, and now it's pulling back down again. So that CCI is also coming back down. Also, we've got these fair value gaps up here haven't been filled. Again, that's a very long-term play if the price in fact goes to that level. But again, we don't trade on those. We just look at it as a potential area of reversal. On the weekly, bearish momentum at the moment below the price and the CCI moving averages. And there's no divergence that I can see there. We had a bullish divergence back here, a very long-term one. For almost a couple of years it ran for, broke up higher, then finally broken back down again. On the daily, bearish momentum again below the moving averages of the price and the CCI, and there's no divergence that I can see there. So bearish trades only to be taken on the 1 hour time frame if you're trading according to the daily trend. Looking at the micro moves, similar to the other charts, we extend our trends, higher lows on the CCI versus lower lows on the price, and we also readjust our minimum retrace level, assuming the price starts rising from where it is at the moment. So move that to there, and anyway, you can see that's gone to that point. So that's a minimum retrace, and that also coincides with what this was previously as a support area. But again, don't go long. I don't trade these divergence. I trade in direction, if you're trading on the hourly, trade in the direction of the daily. So wait for the daily to break higher to take any long trades. This is purely an area for you to look out for. If it does reach that area and then starts breaking down again below the moving averages, take more short trades. Again, truly appreciate your support. Thanks for watching. Hit that like and subscribe button, but also don't forget our Patreon page. Links in the description below, and I'll speak to you in our next video. Cheers.